bit more kitchen sinking. Yeah, it's interesting. I think on a relative basis is not such a bad news. Kitchen sinking in the past we've seen quite a lot from Credit Suisse, right? And it was in the billions. Now it's just 500 million. So let's say I think the market, and you see the first reaction this morning, the market is not so scared. There's some residual kitchen sinking. Of course, legacy issues are a big problem for Credit Suisse. But I think anyone, as you said, who held on the bank so far, they will not change their mind now. And so I think a lot of investors see in Credit Suisse a great franchise, a great business, of course, with a lot of legacy issues. But the repositioning, the resizing the bank has done in the recent past, I think is an interesting investment catalyst for the future.
Yeah, well, we're now, a 20-month low, I think, on Credit Suisse's share price here. So the equity investors, at least, are realizing the pain. But what about from a credit perspective? I mean, they did come out this morning and say the CET1 capital ratio will exceed their ambition of 14%. There's no concern, it seems to me, around the capital levels. How will the fixed income folk look at their capital structure?
I don't think we have any credit issues here. Unfortunately, I don't see any great credit opportunities because the market sees rightly this business as a stable business, so I don't think there will be any wobbles from credit investors. I focus on Credit Suisse more of as a very cheap equity story. The company is trading less than half its book value, so it's at a huge discount versus UBS. We're talking about a company that now is worth less than 20 billion. So it's very much, I think, is very much has some very interesting potential also as an M&A target. It's a great franchise focused on Asia. And we see how Asian business, financials in Asia are performing since the beginning of the year. It's one of the best sectors around. So I think it's going to be more interesting as a credit story. The credit angle is much less interesting, and I think credit investors should feel very safe here.
Can I ask you about the links between the investment bank and the wealth management business? Because before his departure, Jorge Osorio described the investment banking business as ancillary, and it's not exactly what investment bankers think when they're going to work.
No.
They sort of think they're sort of one of the main players in a bank, not really just the support part of the business to wealth management. So what do we see from here? Because it feels as though wealth management's also being dragged under by the reputational issues over at the investment bank.
Yeah, exactly. I think the bad news, if I see a bad news in today's release, is the less than healthy flows they've seen into wealth management. Good flows from asset management, the company reported, but slightly negative flows in wealth management. That's the only sign that worries me a bit, because the big value of Credit Suisse is its franchise. If wealth management clients become less keen on moving their money there, they can have a problem. On the other side, I would say that in the current circumstances, I think Credit Suisse has been very cautious in onboarding new business. So I would take it more as part of the restructuring process than as a big negative sign for the moment. But certainly, I think in the strategic plan, moving from a trading powerhouse to a wealth management business makes a lot of sense. So of course, as you said, investment banking business might not be particularly happy, but from a shareholder perspective, I think this is the way to go.